There is one stock that Motley Fool just pitched as buying Microsoft before the internet, so getting in at the dollar level or something on Microsoft. What's the stock? It is called Coherent, ticker symbol COHR, and we're going to break it down whether or not this is the case. We're going to look at the bull, the bear case, and come to a conclusion on whether this is the best buy in the world or not. If you don't know who I am, my name is Felix Prehn. I'm a retired investment banker. This is my financial analyst here, Hugh, who's well, a little younger than me. So let's have a look at it. First of all, it's a decent business. You can see it on the screen here. It's growing pretty nicely. Cash flow is okay. And it isn't expensive at a C rating. It's pretty decent. This goes down to D, E, and F for fail. What do they actually do? Ticker symbol COHR. Well, they sell a variety of sort of high-tech components. Basically, their main products are as follows. But before we understand the product, this is even more important for you. What has helped me the most as an investor to get better and get more consistent and have less risk are the rules of Wall Street. Rules for entry, exit, and risk management and automating the whole thing. And if you want to elevate your investment skills, well, I've got something better than this video for you. Join me live for a 90-minute training where I'll break down exactly those rules for you, and it's free, and it's part of our mission to make 1 million people financially free. Hugh particularly is very much in favor of more people having time to play with their kittens. So what's the actual product level? And yeah, for that, there is a link down below. It's felixfriends.org/training. It's in the description, or you can just write felixfriends.org/training, but first thing in the description. So what are their products? Well, lasers. Coherent makes advanced lasers for precision cutting, welding, marking, and manufacturing, as well as in semiconductors. And that's, of course, very important, or display production for mobile phones. They also produce specialized materials such as composites, which is sticking materials together that improve throughput and yield in semiconductor equipment and some other applications. At least that's what a lot of Coherent are saying. They also have network solutions, optical transceivers, modules, amplifiers, photonic devices, high-speed data transmission in data centers. You see, this is essentially an AI play. Are you starting to get that? So the main growth driver in terms of products is, however, their datacom transceivers, that's apparently a word, and related optics, which are booming because of AI demand in data centers. Data center revenue grew 61% year over year so far this year, which is pretty impressive. And I can see why the fools at Motley Fool, that's not offensive, is it? Because they call themselves that. The fools at Motley Fool see some upside potential here in COHR. First point, strong revenue momentum. 23% revenue growth, 5.8 billion revenue, which means they're not like teeny tiny anymore. Earnings were pretty good. Now, the last earnings, you can see that here in Trade Vision, it was 19% up, higher than expected, but the stock still cratered. We touch upon that in a moment. But overall, earnings are up 190% on the year. Number three, booming data center demand. Data center revenue is through the roof. Everybody wants a data center in their front garden. And analysts are therefore falling over themselves like fools, issuing strong buy signals from 15 Wall Street analysts. That should make you worry, shouldn't it? And growth, we expect revenue to grow like about 10% over the next 3 years, each year, which is actually pretty decent. So what about the timing thing then? Well, it just dropped on earnings. They obviously said something about expectations. Or did they? Well, go into Trade Vision and you see the news here. And it says, beating estimates on the 14th here. And then it says that they've sold their aerospace and defense business for 400 million. And obviously the market didn't love that. But they're going to use it to reduce debt. The deal is expected to close in the current quarter. And they beat analyst estimates by 91 cents. Delivered a strong quarter. And I'm thinking, hang on. We're not buying this because it's a defense play. We're buying this because, potentially buying this. I'm not saying you should buy it. I was talking about Hugh there. He's very keen. Because it's an AI play, a semiconductor play. So they sell their defense business, they bring in some money, they pay down some debt. That's actually a good thing, isn't it? But the loons on Wall Street are always like, no, don't sell stuff, buy more, get bigger. Bigger is better, bigger is beautiful. So that could in itself create an opportunity. Now, what about the chart? Well, the trade vision chart, as always, gives you these two lines here, that one and that one. This one is the support, and that one is the resistance. What does that tell you? Tells you where institutional investors are likely to buy and are likely to sell. So we bounced off the support level here. It's almost as if this stuff works, right? It's almost as if this indicator is insanely useful. You're only going to find that indicator in trade vision, by the way. We calculate it on the basis of market makers' positions, a bit complicated, but it's tremendous. And we have also, which is not quite so pretty, managed to break below that yellow line there. What's the yellow line? Anybody know? It's the 50-day moving average line. We're below it. And we tried to break through it once, twice. We didn't manage to. So we're not at a point where I would scream buy. Now, so say the loons at the Motley Fool, probably not that sensitive about entry points, but I quite like my money. And therefore, I'm a bit conservative with that. So I would only buy a stock like this once it closes above it. Because if you hit that ceiling twice, it's a fairly decent likelihood you're going to do it again, and you're going to do it again, and you might actually go lower. So we actually wanted to break through the 50-day moving average line and then buy at that point. Me, you, when I say we, I mean me and Hugh. So to me, this is a little too early, but I do think an entry point slightly above these recent highs there, which would be about $96.50 or maybe even $97. That would be kind of what I'd be looking at. And maybe I'll just add it to the watch list, 97. And if you don't want to watch stuff, by the way, you can just here on the chart itself, click on 97 over here, click on the little alert symbol, and they'll say, when it moves above 97.06, I'm going to get a notification. And you're going to get a notification on your phone, on the mobile app that comes free with Trade Vision. And that might be worth doing. And that way you'll actually remember, because otherwise you probably won't remember. How many good entry points did I miss because I didn't automate or didn't set alerts? Like thousands. So now I set alerts or I set an automation app. So I think it's an interesting one. I think it's a good business. I think it's a well-run business. I like it. I'm just saying we just had this gap down here. I'd be a little conservative on that. I'd like to see it break out again. But these things can be good opportunities. So yes, actually for once, often I think the Motley Fool are a bunch of, not just Motleys, but fools. And in this case, I think it's actually a decent bet. Just the timing is off. But, not everybody understands that. But if you, if you want to learn, you know what to do, right? Join us live at felixprehn.org/training and subscribe to the channel. All the best. Are you worried you're going to get caught out by the market crash that will inevitably come because the market moves in patterns? Well, that's what Hugh just told me to watch out for. And in all seriousness, there is actually a structure to predict the market patterns that happens with 90% accuracy. And I want to walk you through that. So you are better prepared because guess what? Nobody expects a crash when the markets are doing fantastically well as they have been.